So just let me know real quickly that you can see the screen and that you can hear me. Then I'll get started. All good from Pete. Okay, great. So I'll talk about a few topics as I go along, like from trading tactics, about trading around levels and whatnot. And then we will, as I'm kind of going through all the charts. So really, I mean, not much has kind of changed here, aside from obviously the yen, right? It's whatever, the market, I guess, was expecting some giant intervention or something. So we, the longs dollar yen were obviously stopped out at break even. That's why you go to break even into an event like that. So we were in position to get, some juice on that, but came up, traded to where it actually opened the week, right above the highs up here, and then obviously just wiped out everything, that's since the April low. So on a longer term basis, I guess you'd say that nothing's really happened with dollar yen. We're right back to where we were here. And we'll look at dollar yen. And near term, I don't really have a whole lot that I probably want to do with dollar yen. But let's start again. Let's just review the dollar in general. Look, you know this chart well. We've been trading down on this support now for like 3 weeks, right? So 2 weeks ago we came down. This is the ICE dollar index. 2 weeks ago we came down, made a bullish outside week, followed through last week. Looked like the dollar was going to, find bids and put in some sort of a low here, especially as we come into the seasonal period, right? For the dollar, seasonally strong period. Basically every single seasonality look back period bottomed last week, except for 15-year, which actually bottoms this week. May, again, this is on the months. May is historically the best month of the year for the dollar, May and November. So we are starting May with the dollar kind of at support, and I guess that's what you'd be looking for if you were looking for the dollar to turn up. But we are at this longer term support, and it could go, I guess, a little lower because the support it technically is just slightly lower. This line, by the way, folks, we're talking about, this is based on, quite simply, the trend line from the 2008 and 2011 lows, okay? And that's extended. I originally extended it kind of up here because that would be the channel, right? Like right here, and then you actually would be at it. So, but what I found interesting was when I looked back in time, I noticed that you actually had that same slope is the the 1992 and 1995 lows. So that's why it's extended all the way back here. And then, it does cross through some pretty heady price action, at times being extraordinarily precise, okay, as far as resistance and support is concerned. So look, for all intents and purposes, on a long-term basis, you're at long-term support in the dollar, okay? Doesn't mean the dollar has to hold, but when you look at it from the, when you factor in other stuff like seasonals and whatnot, I do think that it's a pretty powerful argument from a technical standpoint that, the dollar could find some footing. Here's the daily chart. I don't, here's the pitchfork that would be drawn, I guess, right here. Probably draw it something like this, okay? So you do have the median line again, which is lower, and that could be a level to watch. It's down not far from, I guess, the August range low, but I'm not so sure about this here because it's not really a confirmed slope. With slope analysis, it's all about trend lines, right? It doesn't have to be a pitchfork. You can draw it, a lot of times it's just trend lines, and that's all that modified Schiff is in Andrew's pitchfork. Is it's simply drawing the trend line off the 2 points. And in this case, you can see this trend line here, okay, fairly well defined. Runs through a lot of points. And I guess this would probably be your, we finished up here last week, the daily close on Friday, and I consider the weekly close pretty important. But we had finished up here, so I was kind of thinking that we had a low in place and that the dollar was going to try to head higher. Obviously, didn't happen. We've gone down every day this week, right? Today's candle is largely Japanese yen, right? Even though the yen doesn't make up a whole lot of the dollar index, it's a giant move. So, dollar index is down because I mean this is mostly euro, but euro's not doing a whole lot today. 1340. I mean, I feel like we feel like we've been at 1340 for quite some time. But so here we are at 1340 still. Anyway, so yeah, that's it. I'm thinking that the dollar tries to find some sort of footing down here, but again, been thinking that for a while, and it kind of has, and then we keep coming back into the lows. So this is that dollar index. Our dollar index, the FXCM one, actually into a very interesting spot on the weekly chart. Here's the pitchfork, the slope that I think is probably useful to follow, right? Came into the median line, was resistance a couple weeks ago. We were bearish on that, but then came in, and of course last week's reversal bar did look quite bullish, no, but here we are right back at the lows. In fact, I think, yeah, we actually have ticked down to the lows in this index this week by about 2 points. So, same story as the other dollar index, basically being right at kind of a resistance level. Okay, and then here's the daily chart. And again, this would just be a trend line, so you basically just have a channel. Okay, we actually failed the median line, I guess, 2 days ago. That would have been mostly on Aussie, and we're right back at the lows. So, this is also the October low, obviously, but coming into a level that you could see support at here as well. Again, this is the same level I just showed you on the weekly. So, I mean, look, it's all the same that we've been looking at for the last couple of weeks, really, is that the dollar's coming into the support. It's been bouncing. Bounces have not held. So, I guess you have to be potentially changing your mind on the dollar holding up if it starts to slip through support. But again, just so much from a seasonality standpoint. And the dollar support and everything else, commodities coming into big levels, et cetera, et cetera. I could go on and on and on. All right. Okay. So here we are. Dollar SEK, if you remember, of course, dollar SEK. This was a chart from, again, I think it was a couple weeks ago. Dollar SEK scrapes the low. DXY is a little higher. Same deal going on here. Last, 3 weeks, we've been really at the exact same level. So, this could end up being just consolidation before you do go lower in dollar SEK. But again, it's just a huge level. Okay. In fact, put the sliding parallel on here to kind of accentuate the importance of it. Right. So you can see all the trading that's taken place, on this spot. There's resistance here on the way up last late 2014, late in 2015. I mean, tons of consolidation there. Okay, so here we are. With dollar SEK, I haven't looked at anything as far as a bearish slope, but if you just, let's see what we had if we had a channel, what it would look like. I mean, okay, so same thing, putting you right at a pretty big stinking level. Yeah. Basically, we're looking at this channel here. We're kind of looking at the internal Yeah. All right. Sorry about that. It'd probably be about this one to look at. So, this is support. Okay. I mean, I sound like uh, just repeating myself, but this is support. So, if we continue to bounce, I'd be looking at resistance probably up around here. Okay. So again, dollar sec, I'm not all that interested in trading dollar sec, but again, it's a good indicator. It does tend to lead the dollar, and so therefore, when you get divergences between them, in this case, obviously down on the lows, and the dollar index is not yet on the lows, it gives you kind of a non-confirmation. All right, so there's dollar sec. Okay, let's move on to the majors. We'll start with euro. Euro, let's go big picture. So we've got this new month starting, May, and that's what each actual candle on this chart represents. Is just May, it's May. So this is a monthly chart. Okay, it's quite long term. I get that, but we're looking at each candle here, May. So you've had actually 1, 2, 3, 4, 5, 6. The last 6 Mays have been down in euro. Incidentally, 2009 you had a giant rally in euro in May. Down twice before that, up, down. The seasonality is to the downside in euro, upside in dollar, as we've seen. And again, same level. Here we are. Slope, this resistance here. Okay, same level. We've been pressing against it. So, by the same token, by the way, like yesterday when I put up this chart in yesterday's post, and talked about. I guess I could just pull it up. It'd be probably easier that way. We talked about euro being price actions, and could be a bull flag that launched a breakout attempt, right? So this could just be a bull flag. Okay, it's possible. Okay, not like saying that that's not a possibility whatsoever. What I am saying is that if that happens, you're at such a big point, okay, such a major level, that if that happens, you'd have just an absolutely incredible, probably an incredible run on the upside. Okay, so me, I'm not trying to like get in at resistance. I'm not trying to buy the euro at resistance. Okay, if there's a breakout, then yeah, let's look to see if we can find a spot where we can get into this trade. Because if it breaks out above this, then it's probably going to 123. Okay, and 123 is simply, you've got the high there from 1998, you've got the low there from 2008. Okay, so 123 would be a good region to come into. It's also this 50 line on this median structure. So that would be an objective. Okay, you want to have an alternative scenario, right? My immediate scenario right here is certainly not euro bullish. Okay, just because again we're at resistance. I mean, we've gone through it a million times. But if I'm wrong in the fact that in the thinking of dollar coming into some sort of low, if I'm wrong in that assessment, then euro will make that known, and it will break through this resistance. And once it does, we'll be looking to trade higher, probably to 123. Okay, so I have no problem changing the mind if we need to. All right, and then on the daily chart, this I think is probably the operable slope that we're looking at here. It's just the trend line from basically the 2 ECB days, right? In December and March. We did have a J spike up here. Okay, we did come in last week, and actually the low was 1214, which was right on basically the high from the March ECB day of 1217. Subjectively, my kind of what I'm favoring, if you will, is that euro probably spends some more time sideways, and then lower and comes into support, towards the at some point in May, probably closer to 1060. And I think we can probably all agree that that's a big area. If I were to put up just a simple chart with, a 200-day average, right? Okay, 200-day average is at 1070 right now. It's actually starting to turn up a little bit. And you can see that area being clearly important, right? So that's where we'd be looking for, big support if we were to come into that level. And, again, the trend line for this doesn't really look like it's come in until probably the end of the month or so, but that's what we're looking at as far as potentially big time support if we were to end up coming off again. Okay. Yeah, so I mean that's it. If you break through this, it's a really big deal. But 1060 to basically 1460. I mean, look at just big spot, right? Dangerous to try to front run, in my opinion. So you get through here, it's a big deal. Next spot, about 1,000 pips higher. But until that time, I'm not really, willing to chase. I'm kind of just watching it, see what's up. And again, let's move to dollar Swiss now. So euro, okay. We've established that euro's at resistance. It has been for seemingly quite some time. We've established that dollar's at support, has been for quite some time. Let's move on over to the old Swiss franc. Okay, dollar Swiss, weekly chart. Yeah, here's the weekly. Okay, so this is on arithmetic scale. If we were to go to log scale, you can see that we did hit support 2 weeks ago. If you make new lows, the 94 is still possible support. Where I stand on the long-term possibilities here. Swiss long-term, I do think is going to weaken substantially. So that means dollar Swiss is higher. Fundamental story there's probably going to be a chase for yield. Swiss becomes a funding currency, et cetera, et cetera. You are seeing, some divergence between some of these things. So like the dollar, for example, generally speaking, the dollar index is getting into its lows that we've seen. From the last couple weeks, our dollar index already at the lows. Dollar Swiss obviously is actually not even below last week's low yet. So, it's holding up quite, better than some of the other, dollar markets out there. If taken out of the rest of the dollar Swiss long, I wanted to stop below here. We haven't held this, so right now I don't have much of an opinion on dollar Swiss, but might try to make it 5 days down. Okay, and if it does, who knows? Maybe we end up with a doji on the month. I don't know, but check it out. Here is dollar Swiss, a monthly chart, and again, let's look at this on log scale. If you look at it on log scale, check this out. This goes back, we're going back to the 70s and 80s on this bad boy, okay? It's basically a perfect channel. And you have failed at a pretty big level as far as where we failed last year. What's that? The November high, I guess. But now we've come into a level for support, okay, which is what I would call an internal trend line. Really, it's a trend line, and it cuts through the SNB actions from intervention back in 2011, and then of course the January 15th Euro Swiss peg. Okay, but I'm kind of ignoring those, and I don't mind that you go through them because obviously this is not from a technical point of view. the chart doesn't discriminate. This is a big candle, but you're not really going to draw trend lines off of it, right? So here we are, and on a monthly basis, dollar Swiss is working on a little key reversal, just as euro is working on a little key reversal. Just one day left, obviously, in the month from a trading perspective, and just a huge spot. I mean, as far as the dollar pairs are concerned, this is probably one of the bigger ones. Dollar Swiss, okay. The dollar's in a big area all the way around, but dollar Swiss long term coming into just significant technical levels. So again, as we sit right here, right now, today, I don't have a position here. See how this month ends. Pound dollar. This is one that was pretty positive on. I was sending out some tweets on it last week, last Friday, right? You had this, and the Head and Shoulders obviously has been completed, okay? Could still see a pullback. If you do, your best spot for support is basically where we open the month, 43.59. You do have a confluence there, very early in the month. So ironically, I'm speaking all this dollar bullish evidence and have been for some time, but pound dollar is actually one that seems to be going the other way, and the evidence is strong here that maybe this continues to go higher. Okay, again, I'm not trying to buy this right now. I still have some longs actually from back in the day, but if you were to get pullbacks into former support, 44.60 is a level. It's actually the week open price. It's also the high from 330. 44.58 is a level. We actually almost came into there yesterday. The low yesterday is 44.72. And here's the short-term picture there for pound, right? Trading around this median line. Here's the high volume level from yesterday. Fed, right? Dollar came off, kind of went all the way over, all over the place, excuse me. So maybe this is some small consolidation that you work higher from. What's going on? S&P is coming off a little bit. Crude oil, silver, metals continue to go higher. Market seems awfully crowded to me. But, all right. So yeah, pound dollar, around this median line, 46.67, and then of course 2 equal legs from the low. Gets you 46.82. You could see failure around there. 47.31 is the year open. Obviously a level to be aware of. Okay. Ultimately, I still think pound dollar gets up to 150 or so. Actually, at this point, I'm not sure about 150 because the trend line is actually well below that at this point. Okay. I was looking for this pound dollar move to happen kind of this month in April. April is one of the better months for pound. It didn't happen. It's kind of started to happen actually this week, right? But trading around median line level, middle of nowhere. I wouldn't touch this here unless you're fine taking kind of a throwaway stop, trade under today's low, 45.20, try to get continuation up to 47.30. Otherwise, I think it's worth looking at a pullback into 43.60 or so, and then trying to take it higher. Okay, now we get to the interesting stuff, which is the commodity currencies. So, commodity currencies, start with Aussie. I mean, we have key reversals in both Aussie and Kiwi. J spikes actually, and all that is again is a key reversal with a volatility condition, and we have one in place last week's candle. Okay, obviously we all know as well that it's a very important level because you have the trend line from the August 2013 and January 2014 lows. That was resistance last year twice, January and May, and it's been resistance again this year. Okay, so here we are. So if you go through this, then there's probably nothing until above 79. Okay, that would be the upper parallel, which is essentially a trend line, but it's the same slope. But it does kind of cuts through these levels back here. July resistance from 2014, as well as September resistance from 2014. Okay, but my thinking from a trading perspective, and again looking at the here's like the shorter term chart. Actually, the chart published last night is probably better. Kind of looking for a 5-wave move to the downside, before you get a bigger bounce. So we'd be looking at low 74, 77, 91. So far, you do have 3 waves down, but resistance for potential 4th wave, we've basically come into it. It's 76.57 was the high last night. It's open for the month of 76.56. So on a monthly basis, Aussie's working on a doji itself here. But yeah, 76.56 to about 76.80, which is just a high from over here. Okay, so it's important to state, I guess, that you still have a confirmed uptrend in place because you haven't really broken any support, but you've come off of resistance, and we've obviously come off pretty hard. So, for me, and considering that we're coming off the big long-term resistance, I'm looking at being bearish into short-term resistance, right? So it's kind of a progression. And to me, that's probably about 76.56, 76.80. So pretty much where we were last night. All right, how about Kiwi? Kiwi's certainly been a nemesis to me this year. I mean, the evidence is just crazy overwhelming that Kiwi is, at least the technical argument that Kiwi could turn lower from here. So let's review, right? 2 equal legs from the low, 70.35. Okay, check. Extended advance, check. Weekly key reversal, long candle on the weekly, check. Bearish seasonality, check. Again, here's the seasonal charts for Kiwi dollar. As you can see, turns down hard basically now. Here is May seasonality, the only worst month historically across all time. This is where I want to talk about kind of the trading tactics. So, like for example, I have an order in, or we're in it, or I'm in a trade. I don't know if you guys, follow these things to a T or not, but I'm short some Kiwi, right, at 69.25. But here's what I do when I'm looking to trade or when I am trading these things. All right. So if you remember, the level that we were actually looking to short trigger this thing on was this, right? Okay, so we actually had trend line here, broke it, came back, didn't hit it, came off again. Ripped higher into, this was the RB and Z thing right here. Okay. So what I do when I'm trading this is, I'll trade the level. So like, I'll be like, okay, I'm trading into this level, which is basically 69.30, and I'll short it with a tight stop, and I'll go in with some decent size, and then basically look to take off a chunk, after, like a day trade, right? Take off 20, 30 pips. So I might be trading, a pretty large amount, and take that off once it comes, in. But then I'll leave some on for a position trade where I'm risking like 1% of the account or something, with the stop up here, because basically I'm looking at a chart like this, and I'm saying, well, we're at some big resistance, and I think that we could eventually come back into, support maybe down near 64, 65, and that's how I'm playing this, right, on the swing basis. But at the same time, I'm trading around the level or around the trade, right? So like I'm taking the shot at resistance and then taking some off. So that's how I trade this, right? I can't possibly like sit there and these things happen in seconds. So I'm not going to sit there and do it like, on Twitter. But this is, to give you an idea of how I'm trading my own book. This is it, right? I have the levels mapped out. I'll trade into the level, but I want to trade something that, I've got evidence that I believe in. And so I'll do that trade, but then I'll leave on a good chunk so that when we're coming into, if the idea starts working on a swing basis, you have some on, and then, you trade it down as it goes down and whatnot. Otherwise, it's kind of going to end up as a scratch because it ends up with a winning kind of short-term trade on size with a swing trade on basically no size. Okay, so is this trade going to work? I have no idea. I don't know if any trade is ever going to work. Okay, the idea is to get in the trade, tighten the risk when you can, and let the market do whatever it's going to do. If the analysis is completely wrong, then it's completely wrong. It's just kind of, you can't really do anything about that. Let's take a look at the short-term chart. Okay, so here we are, getting to this level. Kiwi, it's obviously much more of a bounce than obviously I would have thought possible. Otherwise, I wouldn't have put the stop at that level. You do have a possible fork on a short-term basis here. Where obviously it would even be a little higher. The resistance on that, it's up near 70, I guess. I wouldn't necessarily pay attention to this yet because it's not really confirmed. Like I guess you could say it's an okay thing that you've traded around this, and you do have some parallels on this, like right there, but it's iffy, right? And you have bounce from around the median line, okay? So maybe there's resistance up here near 70.07. If we were to hit this and then come off again, like pretty hard, I think it'd be a good sign, obviously, that this is worth following. But until that happens, I wouldn't really follow this just yet. Okay, so there we have it. Kiwi did not anticipate this kind of a bounce. I mean, this has been hell on earth, this thing. I mean, you look like you can count, you've got a impulse up, a 3-wave move down, and then you've got this kind of, like it looks 1, 2, 3, 4, maybe 5 potentially, I don't know, pull back an X, and then 1, 2, 3, 4, 5. Right? So that's, from an Elliott standpoint, I mean, you can count it as a completed wave structure. I'll write it in just so you have it, but you could write it something like this, right? A, B, C, maybe 1, 2, 3, 4, 5, and then kind of an X or A, B, C, X, something like that. Or sorry, that'd be like bigger wave B. Again, I don't think this is a great way to do things as far as trading, but there is a saying that if you can count it, it might be done. So in this case, you can count it. Okay. So you've got this count, combine it with all the other stuff, like the volume. Let's see if we can check that out. Here's that volume I was talking about, the futures volume. Here we go. Okay, so here's the futures volume on the daily chart. And again, OBV works just like, it's kind of, it's like it's confirms or warns, if you will, of of divergences, of weakening, kind of trend, et cetera, et cetera. So, you got the higher highs in price, right? You should really go from here. Higher high in price and a much lower high in volume. It's like not even close. So to me, this is another bearish indication. Okay, I mean, I guess. Look, in this world, lots of things are possible, but look at this arithmetically. Okay, so we're looking at this, and again, don't forget, these are all indicate the month of May, and you can see you've had some pretty nasty months in May for Kiwi dollar. Some big down months. Again, 2009 was the outlier for everything because the dollar just took a huge dump in 2009 in the month of May. But you do have some pretty solid resistance here. I guess it's possible that you get back up to 71 before you head lower in Kiwi. This would actually be closer to 70.85. That would be terrible because that means you'd get taken out of this trade before it turned around. But it's something to be aware of. But yeah, I mean, look, I like the resistance. I like where we're at. I like all the information saying that Kiwi is potentially headed lower. Don't like that it's obviously rallied all the way up here, but better than selling into support and then basically being short from down here with, again, sitting on this kind of a huge loss. So that's what I'm looking at with Kiwi. I still think this is one of the better opportunities out there. All right, why don't we look at dollar CAD, because dollar CAD, and then I want to look at some IDO search stuff. Okay, so where we are here, dollar CAD, and the rate of change stuff we were talking about before. Yeah, well, now we're getting into the end of the month. And dollar CAD, we can do this on a monthly basis now. So we can look at a rate of change on a 3-month basis is negative 10.3%. Here are the only times in history that's happened. The 3 months into May of 2009, in which after that, the next month was June, and you rallied about 900 pips that month. The next month that's happened was the 3 months into October 2007, which actually ended up being the closing low. The next month, of course, you did fall 400 more pips in the beginning of the month and then reversed significantly. That was a 1,000 pip reversal. So we are getting into rarefied territory for dollar CAD. And then, of course, if you look at the daily chart or the on a daily basis, you do have the same charts here, okay, or the same lines, excuse me. And this lower one, which again is support, actually, ironically, last year at this almost exact time, that was April 29th last year. So that would be tomorrow. That was May 6th, and that was May 14th. Anyway, that line is, as you can see, it looks like it's like 24.50 the next few days. Increases very slightly over each day. So there we have that, and that brings me to obviously to crude oil. So we're getting pretty close. If you remember last or 2 weeks ago, after Doha, talked about. I think it's in the 418 post. I talked about crude oil probably going up to $46, $47, and at the time we were trading at 41. Well, here we are. We're getting awfully close to that level. So we did have this little flag here, sideways consolidation pattern. We broke out of it yesterday, and it does look like that wedge is now about 47. It's a little over 47 now. Okay, I mean it's upward sloping, so it's going to be, you're going to increase each day. You do have this. Okay, and we'll talk about the difference here between the continuous contract, which tries to make up for rolls, and then the front month, nearest month contract. Okay, but this structure, this pitchfork structure, this line here, same slope, right? Support, resistance was actually in October. Getting up into that level would be, I mean, we're pretty much there. So it's a couple cents higher. It's like 20 or 30 cents higher right now. Okay, so we're getting close. And then, of course, go to the weekly chart, and you can see that we pretty much are at resistance already here on this too. Again, this is a weekly chart, okay, but it's pretty crazy how precise this has been at times. This is all based off of basically the channel from back here in 2011 May, which was a high, and then off of the August 2013 high, okay? So we're basically there. It looks like maybe a couple pennies higher. All right. Now, if I pull up, let's see. If I pull up the CFD, which again this is actually the CFD is going to be the same as the nearest future. Okay. All that means is it's just the front month future plotted all the time. Okay, so there's the same the pitchfork's drawn off the same levels, but obviously it looks very different. At the same time, you do have levels on this chart that I think are worth paying attention to, and they point to the same level, basically being, as you can see, right up here. Okay, so we're currently excuse me, $46 here, and it looks, this looks like 47 bucks. It's the same thing, different chart, different specifics, but same price as far as where resistance, likely comes in play, or I should say the big test comes in play. All right. So that's where I'd be looking at there, $46, $47. We're at 46 now, excuse me, $47. Okay. Here's the UK oil, right? Brent oil, Brent crude oil. Similar thing here. Channel resistance on this just slightly higher. And what am I saying here? Am I saying to go short crude oil? Not really. But dollar CAD could come into support all the way down into 24.50 or so, and we're really not that far away from it. So if that were to happen and you were to get up into here and see some sort of a reversal, much like we saw with Aussie and Kiwi last week, it would present an opportunity to maybe try to position for a move in the other direction. Okay. Check out gold. I don't know. Is this the triangle break that everyone's looking for? Are we finally going to do this? I thought triangle support would be lower, down near 1220. It looks at this point like today's move is kind of making the argument that we're going higher. So if you can get back over, it looks like 1270 or so, then okay, sure. Triangle it is. This can still morph into a larger triangle. All right. We're counting this as A, B, C, D, and this would be a pretty small E wave. E waves are usually a little more drawn out than that. But I'm not trying to not trying to fight this if that's what it wants to do. Okay. Silver, we had that big massive volume week last week, reversal, huge bar. I figured that we would actually probably come off a little bit more. We did come into the median line support, right back at the highs now. So either this is setting up to fake the crap out of everyone again, or the dollar's going to fall out of bed and metals and everything else are going to go berserk again to the upside. I find it very difficult that silver and if I can get the COT here, I find it very difficult that silver, gold, and all these other markets are able to work higher given the COT profile, the ownership profile. Okay, as you know, you've got the speculative community, in other words, hedge funds, trend following, they have a record net long position in silver. Okay, so it's hard to think that the silver's gonna just go up with everybody long, but it continues to rally this week, so we'll see. But beware of fake outs and reversals and whatnot, given what this looks like. Okay, commercial hedgers have only been short 3 times in history, and here's what happened a few times after they were this short. You got pretty much collapses in the silver price, or at least some sideways trading. Maybe it's something like this. I don't know, where we're retesting the highs and then come off again. We'll see. Alrighty, hold on here. Okay, so that was crude, gold. Let's look at some yen crosses. Man, the dollar's weak right now, isn't it? Every time I start the webinar, what happens at 1 o'clock Eastern New York time? It's so strange. It's like the markets, every time I do this webinar, whether it's Wednesday or Thursday, the market will all of a sudden start moving right when we start doing the webinar. So let's look at yen crosses. I don't really have any idea this point, and nor do I really care to trade the yen at this point. Not with moves that you see like this that really are just kind of stupid, to be quite honest. You do have a choice to participate in this kind of market, and I really don't care for it at the time being. So what we've got here's CAD yen. If you draw a trend line going back to if you got, what's up, Gary? How you doing, man? Funny guy. If you look at a trend line off of the December 2014 high and June 2015 high, okay? So you remember we were following this trend line, and we actually did top there back in March 31st, and the market came off hard and then erased everything. Remember, we were short up here. It came in hard, and paper profits were wiped away after this reversal. Well, now the market has reversed again. So we're obviously going to put in a giant reversal today, and actually a big reversal week. So here we have that. Extend the parallel off of here, and you hit these highs too. So this might be the right slope. That's all I'm getting at, right? If I'm trading this, and again, CAD yen, and we've got maybe crude oil, maybe there's resistance up near 47. It's currently 46, by the way. So if that were to happen, I don't know. I'd kind of write this level down, maybe like 87.50, 87.45. That's the low back here from August 2015. It's the high from March 31st. So yeah, it's something to pay attention to, I guess, if you are so inclined. Okay, here's an hourly chart. You can see the channel. Okay, you've got this channel. See if we can get anything good here. See where the median line is on this. Let's go to a 4-hour chart. So to make the median line, it's just a modified Schiff. It's actually just hit. What do you know? It's funny how that works. Okay, so yeah, we've come into a level for a bounce, apparently, and have bounced actually from 85.60 up to about 86.50. So yeah, let's see how price action unfolds. You're probably going to get some choppy back and forth after a move like this, but even the fibs, if you were to Gary, yeah, we'll look at some dollar yen, man. If this is some sort of the start of a move back down, at least maybe even, I'm not saying to new lows. I really have no, I don't know. It's very difficult to trust anything you see in yen at this point. I mean, they didn't say anything at BOJ, and the market, the Nikkei is down 1,200 points right now. Okay, so clearly it's some sort of washout trade. In the Nikkei stocks themselves, actually, I put a chart on Twitter this morning. There is some interesting levels for support in the Nikkei, but again, at lower levels. So do pay attention to those levels, the charts on Twitter from this morning. But yeah, if you do get some sideways action the next few days, CAD yen, I'd be looking again 87.45, which is actually in the middle of the fib zone, 87.2060. So maybe some levels to work with there on CAD yen. Okay, let's take a quick look then at Kiwi Yen. Same thing here. You've got a trend line. Didn't quite get to it, but it is higher. Okay, just want to point that out. Obviously, a pretty ugly consolidation has been going on more or less all year. At some point, you will get a hell of a break from this thing, and if it's lower, it's going to be pretty nasty on the downside, because that would indicate that you are breaking a major downtrend. Okay, this is the 2009, 2012 lows. Trend line from there has held up on all the tests that we've had this year. did close below it this 1 week in early April. Obviously wiped out everything, came back into resistance. Okay, and again, we're just sliding a parallel, okay, a clone, if you will, onto this level. Hit resistance here on March 31st. Hit resistance last night on Kiwi Yen. Okay. Again, so this is just disgusting looking candle, but it is a massive reversal. So if you do start to get down into this region, pay attention. You could see one heck of a breakdown in Kiwi Yen. Aussie Yen, it's still a channel. It's been a channel, and it's channeling all the way for the last almost 2 years. So we've come off that level. I put this on Twitter the other day. Actually, the month opening price was 86.17. We came back into that spot, as you can see, and have sold off hard. We traded around it for 3 days. Aussie got hit on CPI, and then the Bank of Japan did whatever they did. I should say more the market did what it did, because the Bank of Japan really didn't do anything. Anyway, coming up on potential trendline support now, about 81.90. Actually, pretty close to this low, isn't it? It's a September low. It's 82.10. All this resistance here. So coming into some interesting levels as far as Aussie Yen's concerned. Euro Yen. Don't forget, long term. We've bounced from the 50% retracement, okay, of the entire rally from the 2012 low. Okay, so I see that we failed at this level. It's actually pretty crazy that these channel lines, slope lines can work as well as they do. But we're stuck between two massive levels. Look, everything from March, maybe it's a triangle, okay? Maybe that's a possibility, right? Maybe that's A, B, maybe we're in a C wave. Maybe this is something of a D wave. I don't know. I personally would probably be looking for some sort of consolidation at this point after a move like this. I mean, I don't know how to put. You don't chase a move like this. At least I don't. Put yourself at some serious risk, in my opinion, of getting bearish, expecting a breakdown because you've just declined, wiped out basically an entire month in one day. I'd let the market kind of reset itself, but just pointing out that you're at really long-term important price level, 50% retracement of the rally, that the entire Euro Yen rally. Finally, Pound Yen. Pound Yen, I'm following this, okay? I think at some point that this line right here, which I'll put in red, might end up providing your resistance again. I think we put up a chart this morning. Pound Yen shorter term. Yeah, so the 4-hour chart, I'm kind of envisioning something like this. Okay, you got this big rally, great. Just drop into support, kind of come off a little bit, bounced off, it stabilized, and really nothing's happened during, excuse me, the hiccups. Nothing's really happened during the US session here. Just a little bunch of sideways action, right? So if we were to pop off a little bit, be looking for resistance, that might be your A, B, and then I'd be looking for next week kind of a drop into this level to see if it can hold. And it's 155.90, and what it is the 61.8 of this rally, and it's also 155.75 is the high here from 413. Okay, and then you do have a slope there, and this seems like this goes off of kind of like a very arbitrary level, right? You want to draw your slope lines off of good highs and lows. Okay, like this. This is clearly resistance, support, support, support. held today actually. Okay, but this one, yeah, there's some support there. These are very minor lows, but it cuts through this gap as well. Okay, and gaps are very important. I take gaps as very important, just like highs and lows. Okay, so I would be looking for something around this region here, 55.90. You're at support now, so some sort of a bounce. Look, maybe you get up to 160. I don't know. 158.98 is the high volume level from last night for Japanese yen, at least in pound yen. 160 would be the low over here. Just for argument's sake, let's see what some retracements would look like. Actually, 50% would be 160, 153.93. So, you know, if you start to unfold, rally a little bit, watch this maybe for some resistance, watch this for some support. Okay, so you got two levels there, basically 160 and 155.90 or so. All right. So that's one of the pound yen's actually pretty interesting at this juncture. On a longer term basis, let's see. Longer term basis, just don't really have anything good at this low as far as slope's concerned. You know, this is like the old channel right here that you kind of worked off of back in, that you bottomed off of back in 2012. That obviously worked for a very long time. Okay. So what you're looking at here is quite simply, this was just a sideways channel, and then once the market broke up through it, okay, and came back into it, it was basically support. So eventually, this might be your like really big support, okay, possibly. It's actually about 150. On an even longer term basis, this is the low from 2000, 61.8 of the entire rally from 2011 low. It's basically the same level. So this is looking a bit further out, but I do think it's important. I mean, look, we can see what the hell happens in these markets. I mean, you've got 2.5% moves today in yen crosses. Okay, so I'd be looking at, you know, you want to kind of know that if pound yen all of a sudden out of nowhere gaps down to 147 or 148 in the next few weeks, and in this kind of market, again, lots of stuff possible, then you'd want to know that you have the 61.8 of basically the 2011, 2015 rally there, and also the 2000 low. Right? This is the preparation part, knowing where these things are. Okay. All right, so let's look at dollar yen, because I actually haven't. I've looked at all these yen crosses, have not looked at dollar yen. So here's dollar yen trading 108.07. This is the weekly chart we had up. Funny enough, that median line actually ended up holding as resistance. So two things on this. So there's your old trend line, right? When it's in log scale, which is percentages, we already hit it. We're actually at it now. When it's not in log scale, it's lower. It's like 106. You know, you can look at it this way too. This goes back to 1990, or is it 1989? I don't know. Okay, this is arithmetic scale. When it goes to log scale, it's actually right at it. So you're like, you probably say like, well, how the hell you know which one to use? Well, you really don't. I mean, there's points when obviously you have to look at, you know, you have to look at log scale, because if I look at the Dow Jones, here's like the Dow Jones Industrial Average, okay? If I look at this, for example, this is the Great Depression right here, 30s. This is the stock market crash of 1929. If I look at this way, okay. All right, so if I look at this way, it's a pretty sweet, really, really, really long-term channel, isn't it? That works out this way. Okay, this is log scale. If I look at it on arithmetic scale, it doesn't make any sense. Okay, because this is in points. But when you're talking about currencies, you're not talking about, I guess, unless you're looking at like a hyperinflation currency or something. But when you look at currencies, you're not talking about, hundreds and thousands of percent. I mean, you're talking about, relatively small percentage moves for the most part. Okay, so when we look at dollar yen, there's not a huge difference between between log and arithmetic, but there is a difference. And the simple answer, the only answer really, is that you kind of have to look at both, right? So like I came in this week, and I was like, well, on log scale, on log basis, we actually already hit this support. So we came in and we bought dollar yen at 110.70. It immediately traded higher. So we went to break even on the stop, which was great, because it would have been really pretty bad day if you didn't. That's, to me, that's trading, right? You have some evidence that, oh man, maybe that was a low. Okay, well, where's support to buy it? Okay, well, it came into support, so now I can minimize my risk. All right, put the target at a sensible level, because where we open the month, and I know that markets like to trade to those levels a lot. Okay, well, now we're right back at this level. So if we break below it, I'm not going to say, oh, wow, okay, now I'm just totally bearish because we broke it. Well, not necessarily. What if you trade down and bottom at 106? Okay, and there's a lot of stuff there. You've got, well, it's actually lower. It's 105, mid 105s. But you've got the January high. You've got the October low, 2014 levels. Okay, so your head and shoulders is up around that region too. All right, so here's your long-term stuff. I guess on a long-term basis, I'm really probably not helping anyone here that much, because I don't have a super strong opinion. I guess with this momentum, you'd expect us to get down to this region at some point. But look, let's look at a daily chart. Okay, great. Daily chart. If I'm looking at this daily chart, here we are at the lows. Is that all you get? What if you get a little bit more consolidation? Then you'd have something to work with. And if that happens, I actually think that this 109.70 area, maybe a little higher, what's that? 109.90 region could be your resistance, to work with. Okay, I really don't have a lot to work with right here. Okay, that's the key. And by the way, here we are. If we're looking at this on a daily basis, here's that 2002, 2007 line, which is, again, arithmetic. You know what? It's actually down here on this slope anyway. It extends in off these levels, okay? It's actually down there in early May, I guess, right? I mean, it kind of throughout May, because there's different angles. But, from here, I wouldn't want to trade dollar. I just wouldn't want to trade dollar yen right here. It just, it's right on the lows after it's down 3%. Let's do this. Let's look at 3% drop. If you get a pop, check it out at 109.90. Okay, maybe that's your resistance. Okay, if you drop from here, heads up on this thing making a low near 106. Right, write those down, 106 and 109.90. Let's do this. I want to see what dollar yen has looked like. Dollar yen's down 10% too over the last couple months. It's actually much more common, I guess, in dollar yen than other currencies. I want to look at the daily charts. I want to look at 3% drops in dollar yen. I mean, this is even bigger. This is like August 24th type of stuff. Let's see. Negative, we'll just do 2.9 at this point. Okay. So here we are, 2.9% drop or greater. 2.9% drop or greater, August 24th. Obviously, we all know what that was. Okay. Got to go back. Man, it's not a whole lot. And you wouldn't expect there to be. That was one in May of that was the flash crash, May 6, 2010. Okay, that was an immediate snapback. And then you had financial crisis stuff go down. So September 2008, I guess that was Lehman. You did have a low. So like, look at the price action after when you get crazy, crazy drops like this. Okay, can you see the red dots? It's probably better if I make them magenta. Okay, so this was a down day of 3%. Today, right now, at this exact second, we're 2.99% down on the day. So here we have this, and then you got a low the next day. Selling into this, probably not the best idea. Here was one, October 6, 2008. That actually you did get continuation on that, but you had a pretty solid recovery the next day. Okay, more or less into former support at the time. Okay, so former support. Okay, so you kind of came into that, was just shy of it actually, and then you actually reversed. It wasn't for a couple days later, broke down again. This was the financial crisis, quite a different situation, right? But I'm studying the price action. I want to know what the market looks like, what dollar yen looks like after it does something completely ridiculous like it did today, regardless of what the reasoning is. Okay, this was a 3.1% down day right here. And you had, well, that was a low. That was the week of the crash. That was October 24th. All right. Let's keep going. Back and back and back. Not getting anything here. We're going back now. We're all the way in the early 2000s. So there's really nothing to compare this to except for the flash crash of 2010 and the financial crisis. Let's go back longer. There's 2010, there's the financial crisis, and there's really not much. Okay, we got to go back to the 90s, basically the Asian crisis. Okay, so here that was October 2008. You continued going down. September 98 continued going down, but then just some absolutely crazy price action with getting major. I mean, you ended up a couple days later. You took out the high of that day, so So I hope this maybe provides some perspective on, what it is that you're seeing, or what we're seeing at this point in time. It's really something that doesn't happen, too often. I mean, calling this a 3 sigma move, no, this is like a 10 sigma move. Okay, so we're down 3%, and looking at the prior instances of this, chasing it, in other words, just going short right now is probably a pretty bad idea. And that doesn't mean it won't work, but it's not a great idea from a reward to risk proposition, because look, there's been plenty of instances where moves like this have actually marked a low. Okay, same time, I'm not willing to stick my neck out and buy this either. Okay, because I don't really have, not really planning for this, right? Matthew, we'll take a look real quick. So let's take a look at this dollar yen daily chart. What I would do moving forward for this chart is I would be looking at, basically, as I noted kind of just now, I'd be looking at, if you do get a snapback rally of sorts, which would not be the first time that something like this happens after you're down 3%, I'd be looking at resistance near 109.70, 109.90, okay? You could trade off that level. If you get continuation lower, I'd be looking for support and maybe exhaustion near 106, because we've seen that happen too after you get moves like this. The market continues in that direction for a little while, and then you get one hell of a big low. So those are the levels. That's what I'm going to use to formulate my trading plan for yen at this point. Okay. All right. Let's look at IDO search real quick. Matthew actually asking quickly about pound Kiwi and Aussie Kiwi. Absolutely. We'll take a look at that in a second. Where we got here? What's going on? Yeah, not a whole lot at this point. All right. Sorry, long webinar today, but there's a lot to talk about, isn't there? Okay. So check this. So here's the IDO search. Here, this is interesting to me. So I'm looking at the 1 month, basically, 1 month testing. So it's studying 3 months price action to find the best opportunities for the next month. Okay, dollars are, pounds are. I'm not really much of a South African rand trader these days. I used to be, but I don't trade it a whole lot these days. Here's Euro CAD. Euro CAD and dollar CAD have popped up as the second, third, and fourth best opportunities on the long side for the next month. That's interesting, is it not? And what this tells you is that, why is this is interesting? Because of everything I just talked about with crude oil and dollar CAD and the big ass levels that we're coming into. So on studying the prior 3 months price action, what you have are matches. There's 31 of them. That's a lot. 4% upside against negative 1.6% downside. It's a 2.5 times reward to risk ratio. Okay, that looks good to me. Sorry about that. We back? We back? All right. Okay. Show overlay. Okay, so here are the overlays, and this is basically showing you what the past, the analogs, basically. Your current market is actually, your query is, the last 3 months are in blue, and then the matched market is in black. You can actually see the dates for them here if you want, okay? And you can see, if you hide the overlay, you can see what happened immediately thereafter. You can see a lot of them. Sometimes you went to slight new lows. Sometimes you went absolutely berserk on the upside right away. So when I see something like this, I'm like, okay, let's take a look at EuroCAD, because that's pretty cool. And let's look at EuroCAD. Okay, so here's EuroCAD, daily chart, weekly chart. Here's weekly chart. Okay, looking at this trend line right here, and early two sheets, let's see. I'd kind of look at this, to be honest with you, right? I mean, basically all you're doing is drawing a trend line here, okay, and then extending that trend line from the low, which is from December, and it puts you kind of like right here, right now. So something to watch for as we move forward. I wonder what the momentum picture looks like in EuroCAD. 200-week average just below here. Seeing some divergences show up on the 1 hour chart. There's a lot of crap on here, I know, but this is something I use to look at. So I don't see obviously a tradable long at this point on EuroCAD. Okay, this is looking for, it's kind of it's like we're at long-term support, but I'm not just going to go long. I want to see some sort of response. So what you do have though is you do have a possible first of all, you do have a possible 5 waves down, actually. So if you look at it this way, one, two, three, four, five. How far could 5 go? Well, let's see some measurements. Wave 1 equals wave 5 at 140.35. It's not that far away. It's actually right at the low, isn't it? So that could be an interesting spot. It would also be downtrend support from this 50 line. 140.35. I don't know if there's something to watch. I'd basically mark that down though on a chart. I'd kind of say I'd write down 140.35 as a level to watch for a EuroCAD low. Okay, because look, 1, 2, 3, 4, 5. I mean, you're going to get 5 waves down. Okay, you know what happens after 5 waves down? You get a 3 waves up, and usually it goes back to the former 4th wave, and that happens to be the year open at 150.20. And 140.30 is 1,000 pips below that. So we could be coming into an area where we could get a bounce of 1,000 plus points in EuroCAD. So that, to me, is super interesting. IDO search telling us that, basically warning us that you could get something interesting on the upside. So again, IDO search popping up some interesting results as far as CAD crosses on the upside. Euro Yen's on there too. Dollar Mex is on there. But I always like to look at the top, few, and the ones that I would follow anyway, like EuroCAD, Dollar CAD. Kiwi Dollar was on the top just last week, but then it reversed down hard and it's come back, so it's not on there anymore because obviously it recalculates every day. So anyway, that's super interesting to me, the CAD one. Had a question here from Matthew, asking about pound Kiwi and Aussie Kiwi. Very interesting, Matthew, about Leon. Yeah, I'll do that at some point. Excuse me. I have a scratchy throat. Very interesting. Oh, Leon, there is actually just so you know, I will do another one. It's a good idea. But just so you know, if you go to the website, I did do a webinar that's recorded here, on this right here. So, but yeah, Matthew had a quick question on pound Kiwi's question was long-term buying opportunities in Aussie Kiwi and pound Kiwi shortly. Well, quite possibly, yeah. So we've come into support, kind of held it, I guess. I mean, it's pretty nasty. You did have a big weekly reversal, J spike, remember? Last week. Here's what it looks like. Here's a bullish one. You can see these did not work as tops, but they never even were confirmed. You never even traded below the low of the week. This was a top. This was a fake out. Top, fake out lows, although this was kind of around a low. Low. So you can get some pretty good signals off this. So we already had that. So when I move this chart and I look at, say, this daily chart, okay, completed a wedge. We broke through the wedge. You know what? We're coming back into the month opening price. You know what? The 50% I wouldn't pay attention to as much. The 61.8 is 207.30. Okay, that happens to be right at this slope line. And just to kind of remind you, that slope line is on a lot of stuff. You've got lows here back in March 2014. You got lows here in September. You got, lows, resistance, resistance, basically support back here in February. 240-minute chart, nice impulse rally. Look for a three-wave decline, something like A, B, C. If we can come into that level, 207.30, I think could be a spot for pound Kiwi to potentially find some sort of a support. And this is essentially very similar to EuroCAD on the upside, because what you're doing is you're doing Europe against commodities, right? As far as Aussie Kiwi, I do believe that eventually I'm proven correct on that just yet. But at this point, yeah, let's kind of see here. Aussie Kiwi again. If it's longer term bullish, it's probably just still forming this right shoulder. My best guess, as far as, and that's really all it is. Okay, Matthew, I'm not gonna try to tell you that I know what's gonna happen next. At this point, you should probably know that no one knows what's gonna happen next. All we can do is try to look for good reward to risk opportunities. If we put this up as a channel, we're already below it, so that's out of the question. Put this up as a pitchfork and Andrews line. Could be something down the road where you get a confluence of support at a region. The trend line's probably the biggest one to watch. In other words, the lower one, okay? Because you have failed at the median line. So, essentially you'd be kind of watching for the slope that you came off of, which was this support down here, okay? And it's just a simple trend line, all right? That's my best, kind of advice, if you will, on this, is to take a look at just the trend line. Let's see where some fibs are on this. See if I can get a better sense of the levels. You've got 107.20s. That is all the way down the trend line, but that would be like the next few days. 108.50. That's a 618. Yeah, I just kind of sit with this for a second. I keep it on your yeah. Yeah. No, I think you're on the right spot there. Yeah, keep this on, again, kind of keep it on the side. At this point you've broken through some consolidation. Obviously, you want to see it base a little bit, see if it finds support somewhere. Yeah, that's 108.14 was that low from August. You got here, was that 108.70s, decent horizontal level. But yeah, I don't have anything for Aussie Kiwi at this point, right? Like, we'll come back to it when it seems like it's ready to do something. I just don't see anything at this point right now. But pound Kiwi does look really interesting. Okay. So yeah, 207.30s, 40s, what have you. does look like the spot, if you will. All right, so I am going to wrap it up. A long one today, but there's a lot to talk about. Yeah, Pete, he'll be okay. He did have a medical thing. It's kind of is scare, but he'll be okay. He'll be back. He's a fighter. So anyway, thanks everyone for attending. Good stuff. Good webinar. I'll get this archived up for you and be back later with some updates as always. All right. So end of the month, May, getting some really interesting times. Obviously, sentiment real build up. Obviously on the commodities and dollar bearishness. Might be getting some sort of a fever pitch here. I don't know. We'll see. Always dangerous and scary. When you start thinking. That everything's going to go hog wild to the upside, and you're reading stuff about silver and gold and blah, 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 and crude oil. Well, you know what? Crude oil is up like 60%, okay, from the lows, and we were writing about it back when Barron's was printing it was going to 20 bucks. Okay, well, now we're getting close to some big, huge levels in crude oil. 47 bucks, it's $1 away. Watch that dollar CAD chart 24.50. We're getting close to that. It should make for some very interesting period in May, just like last May, to be quite honest. So, yeah. All right. Okay. Take care, guys. Have a good weekend.